Welcome to the Jay Martin Show. My name is Jay Martin, and my guest today is Greg Smith, the President, CEO, and Director of Equinox Gold, a fascinating company spearheaded by the Titan himself, Ross Beaty. And they came out the gate with a mission to produce 1 million ounces of gold annually, and they are on track to hit that goal. I like what they're doing. I'm excited for the update. Here is Greg Smith. Enjoy. All right, here I am with Greg Smith, President and CEO of Equinox Gold. Greg, it's great to have you back on the program.
Thanks for having me, Jay. Good to be here.
Okay, I'm looking forward to chatting with you and getting an update on Equinox, of course, a bunch of exciting stuff. My subscribers know I'm a fan, and I'd love to explain why, but I want to hear from you. Before we do that, let me just get your thoughts on the gold market right now, because a lot of my guests obsess over price action, and they watch it obsessively day after day. You're running a gold company. How much of your mind does gold price action actually occupy? Like, do you watch the price as religiously as so many analysts and newsletter writers, or are you more detached from that and focused on the business? What's your take?
I'd say it's a bit of both, Jay. It's impossible for me not to watch it carefully. Obviously, it's where we get our revenue from. It's our cash flow, and it has a very substantial effect both on our cash flow and on our share price. We have a very high beta to the gold price at Equinox. So swings in the gold price have a pretty meaningful effect on our share price. And of course, the higher it is, and if we can control our costs, the higher our margins are, the more cash we generate, the more we can deploy that into growing the business. So it's obviously important to us. But I also, and as hard as it is, I have to acknowledge it's not something that we have as much control over, really any control over. I mean, we can do some hedging or some other financial structuring to mitigate the volatility, but ultimately we don't have any control over the price of gold. So, for us, we have to focus on the areas where we do have control. And that, of course, is on operating the business as efficiently as we can, managing our costs, looking for, growth in the asset base, regardless of the gold price. But, we're in the gold business, so it's impossible not to watch it. It's impossible not to be maybe not obsessed, but definitely engaged in what the gold price is doing on a daily basis.
Yeah, makes sense. And your job is to be in the right place, right? And the right time will come, right? I mean, that's what gold mining is all about. So let's talk about that, because reflecting back on 2022, pretty tough year for a gold producer, right? Costs up, gold price down. Walk me through any substantial changes you've undergone at Equinox. If anybody was pointing to you as, okay, it's a good company, but the costs are kind of high. How are they going to survive in this environment? Walk me through any changes that you've made and anything that you think investors should know about right now.
Yeah, I mean, I think, October, November last year is still pretty fresh in my mind, and probably a lot of investors' minds. It was, as you say, very challenging. We had sort of unprecedented, or the highest inflation over the course of a year in the last 40 or 50 years. Wasn't 12% for gold companies. You saw increases in fuel and energy and cyanide and explosives and other reagents, mill steel, everything was going up 30, 40, 50, 60% over the course of 2022. At the same time, you had the gold price coming off, right? And dropping down into kind of the low 1600s. So by the end of Q3, as you said, it was a situation where you've got much higher costs quite suddenly, and you've got a much lower gold price. And for a company like Equinox, where we're deploying a substantial amount of capital to grow, we're doing that with some leverage. Having that margin contraction had a pretty significant effect on, both our share price and on both the perception and reality, to an extent, of our ability to fund that growth. So, kind of November, October last year, we were looking down the barrel of, okay, the margins have contracted. That's just math. And we've still got a mine to build. We've still got to make sure that we're in good shape to do that. So, the changes we made really were I guess, on two sides. One was, let's make sure our balance sheet is as strong as possible over this next year as we bring our Greenstone mine into production. And we can talk about Greenstone in a few minutes, but let's make sure that's in place. And then let's also look at our operations. We're facing this inflation. We did have some production hiccups last year. Let's get our arms around that and work on, optimizing and improving our cost structure, our production profile at our assets. And so those were the two sort of Q4 and Q1 focuses of the company. We were able to do quite a bit. We sold some securities. We renegotiated our covenants on a revolving credit facility. We ended up issuing some gold prepay facilities at pretty attractive terms in Q1 as well. We put in a couple of strips of hedges when the gold price ran in January, and then again. And so, over sort of the last 6 months, we've been able to substantially reduce that funding risk on the balance sheet without even taking into account sort of margins or operating, cash flow from operations. Mm-hmm. Over that period of time too, we also saw gold price start to, it's been volatile, but it's come up another $400 from where it was at the end of Q3. Yeah. And that, of course, has had a nice effect on cash flows from operations. So between those two aspects, the funding perception or reality of challenge that we had kind of looking into next year sort of evaporated. We were able to manage that over the last 6 months. And then on the operating side, we've implemented internally some processes to reduce our costs. We brought in a very senior supply chain employee, and he's working really hard. And we've been able to actually crystallize a fair amount of savings already. We're going to see that persist over the next few years. But looking at that and then looking at the operations and working to optimize them, we did end up, in some of our higher cost development areas, including the Burma Hall Underground at Los Filos. We've suspended that for the time being, and really are focusing on maximizing our cash flow over these 12 months, leading again into when Greenstone comes into commercial production, sort of mid next year.
Well, let's talk about Greenstone. I know you were just on site. You got back last night. So presently, Equinox is producing around 600,000 ounces per year. That's coming from 7 mines spread between Brazil, Mexico, USA. Greenstone is going to be a massive milestone and move you dramatically closer to your initial vision of 1 million ounces produced per year. And so walk my audience through where you're at in that stage. Greenstone is on time and on budget, I believe. Correct me if I'm wrong there. But what should we know? What do you want to share? You just got back from site, Greg. What's on your mind? What do you want to share?
Yeah, I just got back and really happy to get out there again and see the team that's building it and see the progress since I was last there. And I mean, for people that don't know, Greenstone will be one of the the largest gold mines in Canada, certainly one of the largest open pit gold mines in Canada. First 5 years of production, it's doing well over 400,000 ounces of gold per year. It's one of the highest grade open pit gold mines of scale in Canada as well. So this is a big, meaningful project for Ontario, for Canada, and certainly for Equinox. It's right off the Trans-Canada Highway. You can drive there from Thunder Bay in about 3 hours. So the access is pretty good. I was on site all morning yesterday until 12:31, and then drove all the way back to Thunder Bay, hopped on a flight to Toronto, and got back to Vancouver and slept in my own bed last night. So it's not what I would call a remote site at all. It's just outside the town of Geraldton. We started construction in October of 2021, so it's been about a year and a half now since we've been building it, and we're targeting first gold pour in the first half of 2024. So, we're sort of in that final 12-month period here, racing toward construction completion. And it's at the point now where, most of the major infrastructure is up. We're in that mechanical, electrical installation period. And so now it's all about productivity of installing that equipment over the next several months. Well, mining has commenced, but we'll really ramp that up later in the summer. And, hopefully be moving into, sort of pre-commissioning, commissioning as we move into 2024. So it's all going to happen really fast now. And the progress is fantastic. And this is going to be a very meaningful project for us once it's up and running. I should point out, Jay, it's a joint venture with Orion Mine Finance. So Equinox has 60%, they have 40%. Mm-hmm. And, they've been a great partner as well. And together we kind of run a board that manages Greenstone.
Yes. Okay. Now, what are your plans for that partnership moving forward, Greg? Are you satisfied with where it's at? Does Equinox have intention to take over more of that ownership in the future?
Well, I'm very happy with the partnership, and it was the right thing to do, from a risk basis and financial basis when we acquired the asset, to have that partner, because it's a pretty big build, $1.23 billion build. For the size of our company, we really did need that partner to execute that. and they've been great. And, so we're very happy with that partnership. But Jad, obviously I'd love to own 100% of that mine. I think, it'd be great for Equinox. And at some point, I think Orion will be constructive on that because, they're a mine finance company. They're not necessarily a traditional owner of an operating mine. But, we'll cross that bridge when it comes to it. But when we come to it, but absolutely, of course, I love owning 60%. I'd really love if Equinox owned 100%.
Yeah. Okay. Goes without saying. So look, at present with this partnership, of that 400,000 ounces, Equinox receives about 240,000. Where else should investors look for upside right now? You've got 4 growth projects in the portfolio. What, other than Greenstone, Greg, what's front and center for you?
Yeah, we've got a number of areas where we can deploy capital into growth. And, if you go back to you look at for example, our Orion mine in Brazil, it's been an open pit mine since we started production there in 2019. That mine has a tremendous underground deposit and underground potential. And that's an area that we're working on right now in terms of getting a feasibility study done on that underground and hopefully be in a position where we can start to develop the underground sort of late this year, early next year. And that'll have the effect of increasing the average grade going through the mill, which will increase the average annual production and of course the mine life as well. So Arizona, that's a really good project for us in terms of growth at the mine site. Obviously, we have probably our biggest growth opportunity is in our Castle Mountain mine. It's doing sort of 20 to 30,000 ounces now. It's just a small heap leach operation, not too far from our Mesquite mine in California.
Yeah.
But we have a feasibility study out to increase that to over 200,000 ounces of gold production per year. We're in the process of permitting that expansion. And once we have those permits, that's an area that we'll be, keenly focused on getting that expansion underway as quickly as possible. So that Castle Mountain, as soon as we get that permit in, that's an expansion project that'll become a big focus for the company. And of course, we have our Los Filos mine in Mexico as well. We put out a feasibility study in October on an expansion at Los Filos, which would have us build a 10,000 ton per day mill at the site, taking it from a heap leach only operation to a heap leach and milling operation, increasing production sort of at its peak to well over 300,000 ounces of gold per year. So we have a number of areas where we can deploy capital, and that's really what it'll come down to, Jay, is once Greenstone's up and running, what makes the most sense for us in the context of what's readily available to deploy that capital to in terms of growth and where we're going to get the best bang for our buck. But certainly lots of activity in the company around that. And, with that internal portfolio, we got plenty of optionality internally to build out that growth, and again, take us to that 1 million ounces of gold production per year.
What will you look at, Greg? Like, how will you determine where to go first, either to Los Filos or to Castle Mountain? I'm just curious, what will you need to see? So Greenstone's up and running. Let's put ourselves there in the future. Another 240,000 ounces added to the annual production. You're looking where to go next. What are you going to look for to make that decision?
I mean, it's hard to argue the attractiveness of bringing of that expansion at Castle Mountain. Okay. That 200,000 ounces plus in the United States is a really rare and attractive opportunity. So, Castle Mountain is one where we've really been focused on advancing the permitting for that expansion. Yeah. I just think that's just a great opportunity for the company. As you kind of cast your gaze forward, you can kind of see, right? You've got a big production center at Greenstone. You've got another one in Southern California, and really, long-term Castle Mountain kind of has that big profile. And then you have our Brazilian business, which we'll start to consolidate that a little bit in terms of what that looks like, but that's easily a 300,000 ounce a year production center. And then Filos has got it's got a lot of potential, but we have had some social and there's some political uncertainty in Filos. So when you look at it from a risk basis, where am I going to get the most risk-adjusted return for that investment? And Filos is a permitted mine. It's got a huge resource. It's got a long life. That's a rare opportunity in and of itself. So, it's an area that we do want to expand. We want to grow, but preferentially, I think that, first place would be let's get Castle expanded and and up and running, or that expansion up and running.
Yeah, that makes sense to me. I mean, it's hard to argue against American produced gold. It would be a beautiful compliment to Greenstone. Can you share anything on your share structure in terms of insider ownership? I always preach the most important question is how much do insiders and management own? So any highlights you want to share on that front, Greg?
Yeah, I mean, I think if you looked at probably almost the entire production gold space, whether it's majors or intermediate producers, we probably have one of the highest insider ownerships of anybody. Now, the majority of that is held by our chairman, Ross Beatty. But I can tell you that every senior executive at Equinox are also shareholders, and they've been active in buying shares over time. And we also have a share purchase plan in place, which allows a larger number of our employees to sort of participate in becoming shareholders of Equinox long term. So insider ownership is high at Equinox. I think it's between 8 and 9% total. Yeah, and that would compare to like 1 or 2% for most of our peers, I would say. I think there's 1 or 2 companies that have a similar ownership base. Endeavor Mining would be one of them.
Yeah. Okay. All right. You know what? I shared in my newsletter just last week that I was buying more Equinox on the open market this month, and the reason is we touched on the battle that you had to fight through 2022, inflation rising, gold price falling. It's the perfect storm for a mid-tier gold producer like yourself. But frankly, your crisis is my opportunity, and I love where Equinox is right now. I think that you're positioned exceptionally well for an amazing run over the course of the decade. And I encourage people to look like, 600,000 ounces produced right now in great jurisdictions. Greenstones, I would call that near term, given my time horizon. That's very near term in the company story. But there's lots more going on and in good jurisdictions. And I would point to your chairman and say, this is his 15th company, I believe. And
I can't remember. His first gold company was named Equinox.
That's
and
right.
He keeps saying, this is my last gold company, and it's also named Equinox. Yeah. I know he's done a whole bunch in copper and in green energy and in other spaces, but in the gold space, he's had, a few, but number one was Equinox. His last one is Equinox.
His last one, he claims his last one is Equinox. Yeah. I think 15th or 16th. But the notable part about that is that if you were an early investor in the previous 14, you realized a 10x return, which, enough said. I'll just leave it at that. I don't know if that's ever been done before and it will ever be done again. It's the Michael Jordan of the mining sector. So amazing executive leadership at Equinox. Greg, anything else you want to leave my audience with? I've been covering the story on the channel here for a few years and on stage at the Vancouver Resource Investment Conference. I'm a shareholder. I'm happy to share why. But anything else you want to leave my audience with today?
Well, I think, your audience has to kind of look at why they want to invest in gold companies, right? And, for most people, and if not all people, you invest in gold companies because you believe that the gold price is going to increase over time, or it's going to provide that insurance basis to the rest of your portfolio in times of dislocation in the markets. And so what makes a good gold company, right? And I ask myself that question all the time. But you look at mine lives, and you look at the resource and reserve base, and you look at the diversity of jurisdictions, you look at the people involved, and I think that Equinox would really meet a lot of people's criteria. We're bringing on some very long life mines in Greenstone and then ultimately Castle Mountain as well. We've got good places to deploy capital, high return capital within our existing asset base. Obviously, Ross Beatty is our chairman, and I can tell you there's a great team here, working hard every day to create value in the company. And we've been doing it with leverage, and so our share price reflects that. When the gold price has been going down, we've had our shares sort of underperform. But when the gold price goes up, we've been able to demonstrate that we do overperform in that environment compared to a lot of our peers. So if you're like me and you think that we're in a situation here where the gold price is going to outperform over the next several years, then we would be a stock I think people should look at from that perspective. And, we're very open with our shareholders and happy to talk to anybody more about it if they ever have any questions. Lynn, and they can reach out to us through our website and talk to her, or even talk to me directly if they'd like.
Okay. Look, Greg, I appreciate your time, and I appreciate you getting back in front of my audience, sharing the story, getting us the update on Greenstone. And I'd love to do it again as we get closer to production in Canada and get back on for an update.
That sounds good, Jay. And, we are going to be, we haven't had analysts or really anybody to site since last September. I think the plan right now is to get sort of the market back out to the Greenstone mine in September again.
Okay.
And that'll be pretty exciting because that'll be sort of at the beginning of the process of starting to bring the equipment online and start commissioning the mine. And I think there's going to be a lot of news flow around that as we, sort of approach that date and kind of go into Q4 here. So, lots of interesting updates, I think, coming from Equinox here over the next 9 months to a year.
Okay. Well, that's what we'll look forward to. All right.
All right, Jay. Thanks a lot.